All right, I think we're live. Welcome to the next panel for Tuck's virtual summit on AgTech. This is called Financing the Future of Agriculture. I will be moderating this session. My name is Skylar Dalton, and I am a first year here at the Tuck School of Business. Joining me is Sammy Tellatin from FarmRaise, Amy Duffuor from Prime Impact Fund, Robyn from rePlant Capital, and Mark Lambert from Quantified Ventures and the Soil and Water Outcomes Fund / Reharvest Partners, which he will speak a little bit more about that kind of in just a moment. And so without further ado, I figure the best way to jump into this is to have our panelists introduce themselves. And we will start off with you, Robyn. Please kick us off with an intro.
Awesome. Well, thanks so much. And thanks everybody out there that's joining us. This is such an exciting time in agriculture and ag tech. Really honored to be part of this panel today. There's some great friends here and some great change makers. My background, my entire career has been in food and ag. I started on a team that managed $20 billion in assets. I covered the food industry in a very mechanical, unemotional, unplugged way. I'm named after a farmer in New Zealand. I have dual citizenship, so I've always had a global lens to the work. And as a co-founder of rePlant, we are really looking to scale in transition farmland in the United States with alacrity. Right now, we've got an incredible opportunity. 85% of us are buying something organic. 75% of grocery store categories carry something organic, but only 1% of our farmland is organic. And as we transition to regenerative organic agriculture, the financial opportunities for our growers are tremendous. The financial opportunities to really make an impact and with carbon is tremendous for the food industry and, of course, the consumer benefits. So I'm excited to be here. It's an honor. Thanks so much.
Awesome. Thank you. Next up, Sammy.
Hello, everyone. Such a pleasure to be here, and I'm very excited for this conversation. My name is Sammy. I am the COO and co-founder at FarmRaise, which is an early stage company that focuses on helping farmers become more profitable and sustainable by unlocking financial capital for them to invest in their operations. My background is in this space. I have long been interested in the intersection between profitability and stewardship, and you can feel that intersection very vividly in the agricultural sector and on farms. The problem that we're solving at FarmRaise is really that 95% of farmers are eligible for the billions of dollars in conservation funding that's available every year, but only about 10 to 15% are utilizing those programs. So we're unlocking those barriers and helping farmers access funding so that they can implement best soil health practices. Excited to talk with you all more about that today.
And Amy?
Hi, everyone. It's really nice to meet you. Thank you so much for having me. Amy Duffuor here. I'm a principal at Prime Impact Fund, and my background is probably a little bit different from others on the panel because I am not solely focused on ag. So I'll talk about Prime Impact Fund in a minute, but just wanted to give you a little bit of context on who I am. So my background is hybrid business, finance, and impact. So before I joined Prime Impact Fund, I was a renewables investment banker at Bank of America, so worked with public and private companies to help them scale and raise capital, including the IPO of Sonova, which is a residential solar company. And Robyn, since you're from Houston, they're also based in Houston. And then aside from my stint on Wall Street, I used to run early stage social venture accelerator programs around Southeast Asia. So I was based in Singapore, Malaysia, and the Philippines, working with some ag tech companies, some fintech, some ed tech, some clean energy companies. And I got really religious about climate change. I figured if we don't solve this, nothing else matters. And the Prime team really focuses on large scale climate mitigation. And for those of you who know anything about the climate crisis, which is many people here, is that agriculture contributes to over a quarter of global greenhouse gas emissions. And so that's a key area of interest for our fund. I made our first investment into an ag tech company called Clean Crop Technologies. It is a crop loss and food safety and food waste play. They're incredible and doing incredible work. And we're really committed to deepening our work in the ag tech space. And, I'm just really excited to be here and share a bit about my experiences, but also learn from these other incredible panelists.
Great. And last but certainly not least, Mark.
Yeah, thanks. Hello, everyone. I'm Mark Lambert. I'm a vice president at Quantified Ventures, which is an outcomes-focused impact investing advisor based in Washington, D.C. I also lead our agricultural finance subsidiary, which is an entity called Reharvest Partners. And that subsidiary manages a project called the Soil and Water Outcomes Fund. That program is designed to leverage private return-seeking investment capital as a source of upfront financial payments for growers and farmers to implement new on-farm conservation practices that achieve both water quality as well as soil health or carbon sequestration outcomes. So we'll talk a bit more about that program. My background is in agricultural real assets investing. Worked at a company called Farmland LP and helped start that company for a number of years, which is doing sort of large scale conversion of commodity agricultural land to organic, and also in water infrastructure investing and development, and hope to paint a closer picture of those two seemingly disparate resource concerns or areas in this panel. Anyway, happy to be here. Thanks for the invitation.
So my next question is kind of digging deeper into the why and the how of the initiatives that each of you run. And Mark, would love to ask you to go first. How did the Soil and Water Outcomes Fund and Reharvest Partners come to be? Like, why is that important that that work is done? And what does it look like?
The original thesis behind that project was to try to link more closely point and non-point source actors in a watershed, which is a fancy way of saying farmers upstream and the downstream beneficiaries or stakeholders involved in drinking water or wastewater, typically municipalities. And in states like Iowa, in particular, which is where we got started working, there's a very strong connection with water quality impairment resulting from upstream agricultural practices and the downstream investments required by municipalities to help address those nutrients. So our original thesis was that we could work with a city to issue a bond, use the proceeds of that bond as the source of farmer payments to promote the adoption of practices like cover crops or no-till that we know improve water quality. That idea morphed over a couple of years to the current incarnation of the Soil and Water Outcomes Fund, where the principles are pretty similar, although rather than using public finance and municipal bonds, we're using impact investment capital as the source of that upfront payment to farmers, and then quantifying the resulting environmental outcomes of the practices they're implementing, pounds of nitrogen and phosphorus reduced, for example, and selling those outcomes to entities like municipal wastewater treatment utilities who are purchasing them because it's more cost-effective means of achieving nutrient reduction goals for regulatory or voluntary reasons than technology. We stack those outcomes together with carbon, which of course is the sort of outcome du jour, at least over the last year from agriculture. Our view is it's one of many benefits that result from more conservation-oriented practice sets on farms. We're really looking for ways to unlock that full spectrum of ecosystem service value so that farmers can get paid fairly for the practices they're implementing, or more accurately, the outcomes that they're producing, with the goal of really scaling up agricultural conservation significantly across the country. So we started with a pretty defined use case, working with a wastewater utility, the city of Cedar Rapids. We've since expanded to all sorts of different customer types and a lot of different geographies across the US, but that was really the inception of the idea.
That's awesome. Thank you for sharing. I think it's just the beginning of great work like that to kind of take over the rest of our farmland, hopefully, at least to those who are interested in adopting those principles. I'm going to pass it to you, Amy, and would love to hear kind of similarly, what was the genesis of Prime Impact Fund, and what's the investment thesis there that from my perspective is a little bit different than kind of traditional clean tech investing?
Yeah, no, great. So, I mean, in general, Prime Impact Fund, it's an early stage VC fund, and we invest in technology companies, primarily hardware-based companies with the potential for gigaton scale climate impact. And so when I say early stage, we mean pre-seed, seed, and Series A rounds. The key innovation in the Prime Impact Fund model has a little bit to do with the way that we're structured. And so I want to talk a bit about that, because I think that's a kind of a differentiator, and one of the ways that we really use to support agriculture-based startups. So Prime Impact Fund, it's important to note, is an initiative, an investment initiative of Prime Coalition, which is a 501c3 nonprofit. And Prime Coalition's objective really is to use catalytic capital to drive climate innovation. And so what is catalytic investment capital? It is more structurally patient and flexible than conventional investment capital. And at Prime, we want to take this inherently patient and flexible capital to de-risk early stage climate technologies for follow-on investors. So the name catalytic capital sounds exactly like what it's doing. You are catalyzing investment into a particular technology, company, or space. And in the climate tech space, that's super important because, while climate is really hot right now, no pun intended, a lot of the early stage venture deals tend to favor assets that are much more capital light. And when you think about hardware-based companies, if you think about agriculture, particularly investments that are less downstream towards the end consumer, but are more upstream towards the producer, hardware-based investments are really important. And they're more capital intensive, and they often require a longer investing horizon. And so the innovation in our model is that all of the capital that's coming into Prime Impact Fund, so the types of capital that's invested by LPs, is what we call catalytic capital. And so that allows us to do things differently and support companies differently, we believe, than conventional venture capital. So I would say that this really manifests in our investment thesis in kind of three key ways. The first is that, we are only investing in companies that have the potential for gigaton scale climate impact. So I don't really think in terms of gigatons, but if you imagine all wind globally deployed, that's around 2 to 3 gigatons of greenhouse gas emissions reduction per year. So we are asking pretty early stage companies to have transformative climate impact. And that's by design. We measure that, and I can talk about that a little bit later. But that's really the first key part of our investment thesis. And again, because agriculture is responsible for over a quarter of global greenhouse gas emissions, we are extremely focused on agriculture technological innovation because it is such a key part of solving the climate crisis. The second piece is a criteria that we really call additionality. Because we have this special color of capital, we want to be really thoughtful about when we use it. And so often that means we come in earlier than others. We are often the first institutional investor into a company. It means that we maybe are the only investor around the table to prioritize deep climate impact, or we're investing in a category that other venture investors are, kind of scared of. And we like that because the whole point is to use this more structurally patient and flexible capital to de-risk these early stage companies and help them achieve additional proof points. And so that's really, really important. We want to make sure that our capital is additional. And then I think that the last piece to that is, sometimes people say, oh, you go earlier than others. Are you just trying to invest in science projects? And absolutely not. At least not science projects that want to stay science projects. We believe that to have sustainable and scalable large-scale climate impact, large-scale greenhouse gas emissions reductions, you need to be a self-sustaining enterprise. And so the ability and the attractiveness to follow on investors is a really key piece of this. And I know I've been talking a lot, but maybe the last thing I'll say is our investment into clean crop technologies, I think, is a really good example of this. What they're doing is they have developed this high efficiency plasma that can degrade pathogens, toxins, and pests responsible for food waste. Food waste is responsible for 6% of global greenhouse gas emissions. And so there's not only the large scale gigaton scale climate impact angle, but we led their seed round alongside another, a whole group of wonderful institutional investors who, some of which are AgTech specialists like Innova Memphis and Bread and Butter Ventures. And the progress that we've seen, I was just there yesterday, actually, first portfolio company trip since the pandemic that they've made in a year is incredible. And we hope that our capital has really helped them de-risk key elements of their technology and will enable them, they're going to go out, shortly to raise a Series A. So hopefully that example sort of tied in the model and the problems that we're trying to solve.
It absolutely, it absolutely does. And I appreciate that kind of thorough explanation of the work that's being done at Prime Coalition and at Prime Impact Fund. I think up next, I'd love to hear how we got to this point with FarmRaise and what problems FarmRaise is solving.
Yeah, this is great, and it's so cool to get context, Amy and Mark, about the origins of your ventures. So at FarmRaise, the seeds for our company were planted in graduate school. So I'm excited to share this story with many of you who I imagine in the audience are currently in graduate school and thinking about what's next. I went to graduate school thinking I'd be the only person in my program excited about soil health and focusing on that in business school when I met my co-founder, Jace, who happened to grow up on a farm in Virginia, and their family received USDA cost share to implement better grazing practices. And from that saved thousands of dollars a year in feed costs for their cattle, and also saw all these additional benefits with water storage and the quality of the grass that they were growing. And so she has this very tangible example of the impact and the benefit of participating in conservation-oriented financial programs. And then I had come from working for several years at the USDA administering these grants and talking with researchers and farmers about the barriers growers were facing in adopting practices like cover crops, which still today are implemented on 5% or less of cropland acres. So there's a huge gap there. And so Jason and I put our heads together. We interviewed over 100 farmers during our time together in graduate school, and they asked us to build them a TurboTax for farm funding. They were struggling to figure out what programs they were eligible for across both the public and the private sector. And then they were even more daunted by navigating the application process, which can require multiple fields, multiple forms to be filled out, multiple visits to the service center in their county. And so we have set out to streamline and simplify that process with the thesis that by unlocking financial capital to help growers make the transition to soil health and other practices, that those growers will be more profitable in the long run. Because many of these practices, they have an upfront investment cost of 3 to 5 to 8 years before farmers actually see the benefits in cost reduction and yield increases from the practices. So we're about a year and a half into FarmRaise right now. It's been very rewarding to work with growers, and we're excited to scale up what we've been doing over the coming months and years.
Thank you, Sammy. I haven't applied for conservation grants today, but I have applied for a couple value-added producer grants on behalf of some farmers, and can speak to how laborious that process is.
That one in particular.
Brutal. And so I think that's a nice segue in terms of helping bridge that transition into the work that Robyn, you and your team are embarking upon at rePlant. And so would love to hear the how and the why for rePlant Capital.
Yeah, so the three of us that came together as co-founders, not quite as early as grad school, which I wish, had been the case. However, as most people are aware, it's really in the last 10 years that this incredible awareness of soil science and the capacity for soil to hold carbon has emerged. And part of me, having grown up in Houston, not surrounded by this type of thinking, I thought, did I miss this? And as I sat with soil scientists from Colorado State and other places, they're like, no, this really in the last 10 years, we've really understood the power of this. And certainly there were people that preceded that, but this awakening that has happened has really galvanized the food industry. And so as I was doing the work with the food industry, Don Schaefer, one of my co-founders, was CEO of RSF Social Finance. He was an early lender to the organic industry before anybody was giving that credence. And then Dave Haynes is the third co-founder. He was a managing director at Greenmont Capital, one of the first B Corp certified private equity firms. So there's a real there's a real, circle of talent and knowledge in the three co-founders. And as we put our heads together, all of us were enormously frustrated by the fact that we had not been converting farmland to meet the need of the 21st century consumer. You parallel beside that the fact that as you convert that farmland, soil is able to serve as a powerful carbon sink. And so it's just this win-win scenario. So we, as a team, put our heads together and we thought, how do we facilitate this? How can we expedite this? How can we tap our collective networks to move this forward at scale and with alacrity? And so Don had 1,600 clients at RSF. Primarily 80% of them were women. What we have found is that we are raising $2 billion to deploy over the next 10 years, like Mark and Sammy have touched on, absolutely putting farmer profitability first. What's fascinating in those conversations with the farmers is that they had been sold on this storyline of yield. And all of a sudden, 20 years into this agrochemical model, which has resulted in $426 billion of debt for our farmers, they're saying, why were we focusing on yield at the sake of profitability? And so it has truly gutted the US farm economy from the inside out, this agrochemical model. And I think, something I say often is you cannot fix a broken food system with a broken financial system. We have a very extractive model in the food and ag system because we have an extractive model in the financial system. So we stepped back from that and said, how can we use the word regenerative? How can we use the concept of regeneration beyond the farm? What does it look like to utilize regenerative capital? What does it look like to have a regenerative financial system? And so with that conversation, we began speaking to the multinationals, these companies that I've worked with for the last 15 years, to say, how can we facilitate this? Because if you're going to transition farmland, that's a 3 to 5 year process. If your lending is coming from these conventional banks that have you dancing on that quarterly earnings model, there's a timeline tension there that just doesn't match up. And so as I was speaking to these different multinationals, probably about 5 years ago, their heads would just lean in and say, where's that alternative source of capital? As has been touched on by this panel, there is enormous wealth sitting there trying to figure out what to do. Some of them want to be part of the climate story. Some of them want to be part of BIPOC farming. Some of them want to be part of building the US farm economy. How do you want to make an impact? There is no greater place, in my opinion, than the agricultural space. It is a tremendous opportunity right now. So we are standing on the front of an industry that is emerging. So for rePlant, we're raising $2 billion. It's going to take $700 billion to convert the farmland to these regenerative practices where we are stewarding the soil and stewarding the profitability of the farmer. So at $2 billion, we're just like a fleck on that. And our goal is to really mobilize and catalyze this movement. And I truly hope that 10, 20 years, we look back and we're like, wow, there were just 4 of us on this panel. Now there are 400 people that they can go to, and all these people that have been inspired to really engage with us, all of us that are here on this panel, because as you've heard, there are so many ways that you can come in. There are so many places of intersection. And I think the best advice that I could give is find the thing that you're passionate about, the thing that you're going to get out of bed every day, even on the really crappy hard days, the thing that just you can't not do. Find the thing that you're passionate about, lend the skills and talents that you uniquely have. If you're missing something, find a partner. And we invite, I'm sure I speak for this panel, we invite you guys to get involved.
Well, I'm just grinning ear to ear because I am so excited to be in this esteemed company. Something I've heard from, I guess, everyone on the panel, but I would like to touch down with Mark and Sammy and Robyn on is the farmer first mentality, which to me, in my prior career was so critical to being able to move the needle, and would love to hear how you got, what does farmer first actually look like? It's something that I think more and more people are saying because you can't get farmers involved unless you let them know that they're a critical piece of the puzzle. But when I guess the rubber hits the road, Mark, what does farmer first look like in kind of a daily, monthly, and brand operationally way at Reharvest?
Yeah. It's an easy thing to say or claim because you kind of say it and sound credible. But the reality is that being farmer first is an incredibly complex and varied undertaking, and it might change from farmer to farmer. What farmer first means right now, if I was a farmer, it's kind of an unenviable, or perhaps will be enviable position to be in, which is they've probably got 6 groups walking up their driveway every week asking them, hey, can I buy your carbon? Or can I pay you to do something? And it's a little bit difficult and opaque probably, I mean, we know this from farmers engaged in our program, to understand which of these are credible, which of these are going to generate long-term value, which are going to be around. So the primary tack, this is transparency. Here's what we would like to do for you. Here's what we will pay you to do it. Here's who we will be selling your outcomes to at what price. I think building trust and relationships with that community generally is the thing that drives scale. I think there's a number of initiatives being developed with good intentions, but with a lack of direct consultation with the group for whom they will benefit or they're intended to benefit. And there's a chasm developing to some degree between AgTech and FinTech and what farmers are looking for or interested in on the other side. So our position has been from the beginning, yeah, we're trying to solve for the challenge of creating an environmental benefit, but we're not going to do it unless the farmers tell us what is it we can possibly do practically within our operations to achieve it. So what that means in practice with our program, we're not prescriptive about practice. We allow a farmer to propose, I'd like to do practice A, B, or C. Okay, we'll calibrate a payment accordingly. Farmer can come to us and say, I need technical assistance or access to equipment, or I don't. We'll provide that for them if necessary. So I guess we're kind of in listening mode still when it comes to what farmers are looking for. It's a little bit different every time, but it's our strong belief that the market is kind of trying to the demand side for the outcomes that we're creating are trying to force themselves into being the force that pushes this market, and they're going to run into a wall of the rate at which farmers are willing to innovate and adopt change and the ways in which they're interested in being incentivized. We pay up front. The average farmer payment in our program is close to $40 an acre. We pay 50% of that upfront when a farmer signs a contract, and we take the risk that perhaps the outcomes aren't produced that contract is proposing to implement from cover crops or no-till. That's fine. We're sharing in the risk. We think farmers should be rewarded upfront for the practices that they propose to implement. So I don't know, those are maybe some elements, but I think it's tricky because being farmer first, in my view, it takes a lot of different forms in different use cases.
Totally agree. And something like a thread that I want to pull on there that I heard from you, Mark, is that like no two farms are the same. And I think if you spend enough time on farm in an industry, that's quite clear. But for folks that might be newer to the ag or ag space, I just would like to kind of retweet that comment that there are no two farms the same. Robyn, would love to hear from your perspective how rePlant approaches being farmer first.
Yeah, I think it's really important to emphasize that we are coming out of this one-size-fits-all mindset that was enormously destructive and extractive, and to really give ourselves permission to say, one-size-fits-all almost broke or did break the agricultural system. And again, as Mark has emphasized, to give ourselves permission to say, how do we actually regionalize this approach? Because if we're talking to a bunch of almond growers in the Central Valley and we're talking about converting almond orchards to these regenerative practices, they're used to having a clean floor, which is like this super shiny pride thing. The floor of that orchard is clear and clean, and they take pride in that. And all of a sudden you're going to introduce cover cropping, and it looks dirty and it looks messy. And so culturally and psychologically, how does that transition happen? So what's interesting is that as we shift to this soil stewardship model, we're going from sort of this really heavy chemical input model that required an enormous amount of financing to a consulting and service model, this stewardship model. What that requires that we see is that technical assistance provider. So that's not us. That's not anybody in Boulder. That's not anybody in Oakland. Those are guys on the ground, Mitchell Hora, who you guys have coming on later, guys on the ground that can talk farmer to farmer through that transition. And when you put the farmer first, to me, what that means is ensuring that there's profitability, because the crisis that's happening isn't just the farmers are in debt. It's that young people don't want to step into the operating system of farming because the livelihood, that chemical model, the chemical input model, the debt levels that it requires. So when we talk about this crisis, it's a generational crisis as well, where suddenly farmers are sort of strapped and saying, my kids don't want to step back in. So putting farmer first is ensuring the legacy of that farm. It is putting the profitability of that farmer first. And then I think a really critical piece, especially in the ag tech space, is, as someone once said, unfortunately, there's not a lot of ag in ag tech, and there are a lot of very brilliant, very passionate, very well-intended people coming into the space. The first question I ask of any of those companies, How many farmers have you consulted with? Have you actually been on farm? Because you can conceptualize something, spend millions of dollars developing it, but if the farmer's not going to use it for who knows what reason until you actually talk to them, you're wasting everybody's time and money, and we don't have that time to waste. The urgency around the climate crisis is real, and it's in front of us, and so that luxury of sort of iterating on these different designs, we've actually got to bring people around the table faster. So for me, putting farmer first, farmers engaged in absolutely every aspect. And I think this model that we've inherited of this very extractive financial model, that the farmers weren't part of that conversation. The farmers weren't part of the banks as they were figuring out what products to offer them. The rePlant, we sit down with them and there's a collaboration with the farmer. What is the product that you need? What are the terms that you need? We are using catalytic capital, as Amy touched upon, because it gives us that grace and flexibility to design products and terms that afford us the opportunity to create this transition. So it's really reimagining, you know, from farm to finance, the opportunity to put the farmer at the center of this thing. I think that the talking point is profitability, but beyond that, it's legacy, it's governance, it's guidance in the way that we're restructuring the system.
That's great. And I think kind of flows nicely into something that Sammy said at the beginning of having talked to hundreds of growers before ever even thinking about what a product would look like to make sure it was in line with what would actually be influential on the farm. So Sammy, you kind of, again, spoke to this at the beginning, but would love just a brief, if you have anything else to say about what does Farmer First look like at FarmRaise, because I think the way that you guys approach it is just like kind of spot on. So would love to share with the audience.
That's very affirming, and it is so important to us. Farmer obsession is our core value. It's our first and our core value. And I think Robyn and Mark nailed this and said it really well. It manifests both in the abstract in terms of how you think about orienting towards success as a company, but also very tactically on the ground with how you build your product or your service and deliver that to farmers. And so what we've seen at FarmRaise is, like, we have a Slack channel devoted to farmer quotes, and we are constantly filling that up with quotes from our farmers as we talk to them every week. We're building a digital solution for a problem that is currently solved with a very high human touch. And so that has required a lot of iteration and learning and really getting feedback from farmers and beta testing of the platform about what's working and what's not working. So when we rolled out the first version of the platform, after iterating and building that, we tested it with over 50 farmers before we felt comfortable releasing it to the public to get feedback on that. And now we've continued to use that iterative process. Mitchell Hora has been part of that for us, and he's been an incredible support, as well as many other farmers across the country. And then it also manifests in the way that we speak with potential funders. So there's a lot of private investment interested in working directly with farmers, and what's sexy for investors might not make sense for farmers, which is why what Robyn and Mark have built is so unique and outstanding, because it has been informed by farmers and partnerships with farming organizations. Whereas some investors come into the space not having spoken with growers and wanting to do pretty complex investment mechanisms that probably don't make sense on the ground, and that a farmer might not be able to really comprehend or have the time to navigate. So giving that feedback and providing that voice at the table is super critical. And then one more thing I'll share is just that farmer obsession at FarmRaise is also how we communicate with our growers. And so we always make sure to get from our farmers a sense of how they want us to contact them. And you'd be surprised how many farmers just want you to give them a text or a random phone call. You can't necessarily fit farmers into the box of push notifications or globes on your phone. You have to be creative with how you remind growers to fill out their paperwork or do other things that they need in order to access funding.
And I have met many growers in my career that love like a calendar invite. Like, how dare you? Especially if they're the ones that are on the combine. So switching gears a little bit, this is all like great in theory. I'd love to talk a little bit about how we're like measuring and implementing. So I'd love to switch to Amy and hear a little bit about like, how are you guys measuring climate impact? And what does that mean to you kind of at the beginning and then throughout your relationship with a portfolio company?
No, it's a great question, and I love hearing from everyone on this panel. So, for us, I mentioned the North Star for us is gigaton scale climate impact, which means greenhouse gas emissions reduction cumulatively should be at least 0.5 gigaton by 2050. And so one of the key challenges within the climate space is that there's no sort of standardization of these climate impact metrics. That's the first piece. And then the second piece is a lot of the climate metrics that are out there are retroactive instead of forward-looking. And when you're working in early stage venture, you want to be able to have a way of creating a forward-looking metric of greenhouse gas emissions. And so we created and really honed a methodology amongst several partners called an emissions reduction potential assessment, which is a forward-looking calculation of greenhouse gas emissions reduction per year. There is a sort of open source publication which talks about our methodology, but more importantly, like we didn't want to just keep this information to ourselves. Like part of the ability for people that are within the ag tech space, if they are interested in talking to more climate, broadly climate focused investors who are looking at greenhouse gas emissions, is being able to talk about their impact. And we created an open source tool called CRANE, stands for Carbon Reduction Assessment of New Enterprises. You can go to cranetool.org. And essentially you can put in the sector, the technology or vertical that you're working in. It will spit out an output based on different parameters, whether it's your deployment year, whether it is your penetration within a particular market. It also even takes into account other technologies that could come and displace that. And it essentially allows you to see what your greenhouse gas emissions reduction for a certain period of time, the projections can be. That's really important. That allows startups to have a starter for 10 and able to communicate more effectively with investors. It allows investors who are using a greenhouse gas emissions lens for their investment thesis to evaluate, particularly, of relevance to this chat, ag tech startups. And we think that's really critical for the broader space. That's the first piece. And then it doesn't just start with us doing this emissions reduction potential assessment for every portfolio company, which we do. If they don't pass the 0.5 gigaton bar, no matter how much I love the team or the tech, like we can't move forward. But we also track the climate impact once they are officially sort of onboarded to our portfolio. So we set metrics that are linked to operational milestones, which the company can control, which then relate into products deployed, which should then relate into the emissions reduction potential, or once a company starts deploying, what the emissions reductions realized are. And we report that out to our LPs because we want to hold ourselves accountable. The whole point is climate impact, and we want to help ourselves and also our portfolio companies have a roadmap to achieve that. So long story short, we take measuring and managing impact very seriously.
I think that's great to hear and so critical to kind of underscoring the work with extra legitimacy. So thank you for sharing. I have so many more questions on my agenda, but I think we're going to have to skip to the last one because of time, because we're almost there. So apologies to those who have asked questions in the question box. They're very good ones. And maybe we can do a part 2 in the future. So I am going to include my question for y'all, and I'd like for you each to answer it, I guess quite briefly, this is called Financing the Future of Ag. I would love to hear from each of you what the future of ag looks like, and then to pull in a question from Elizabeth, like what do we need to get there? And we will start with you, Mark, and again, let's try to keep it brief, but paint me a picture and then tell me like 1 or 2 things that we're gonna need at the table to get there.
Yeah, well, we have a pretty specific perspective on this, which is that we hope it's outcomes driven rather than practice driven. And so selfishly, that's probably the way I'm going to answer that. We think there's been a lot of inefficiencies in the way in which conservation has largely been incentivized in the agricultural community largely through practice-based cost share, which is great. It's gotten us further, but Sammy called it out. There's 5 or 6% penetration of the types of practices that we're looking to promote. Something's not working efficiently. So our view is if you can reframe transactions and conservation around an outcome, which allows you to do all sorts of creative things like focus your capital on the most efficient practices, stack together outcome customers in one transaction, there's a lot to be gained there. But I also think, and I think this is a great representation on this panel, there are silos, to excuse the pun, let's just say walls being built between initiatives like the 4 on this panel that could be broken down to achieve greater scale. And I'd love to see more collaboration. Like imagine the $40 an acre payment that we're able to provide to a producer, helping to achieve a better underwriting for a loan from, and forgive me for like calling out rePlant, but as an example for rePlant, because it makes that producer less risky because they're generating more on-farm revenue. And could that also accrue to the underlying asset value? Like, so there's all sorts of interesting evolutions there, but coordination and outcomes, I think, are 2 advancements we're really excited to see.
I'll jump in because Mark just passed the baton to us. So, you know, integrated capital is very much the approach of rePlant, and we are in partnership with different organizations doing exactly that. One of the reasons I was so thrilled about being part of this panel was the first time to really listen to Mark speak about the projects and the work that we were doing. The collaboration, the collaborative opportunity in front of us is enormous. And I think the mindset of this fear of scarcity that has governed agriculture is so detrimental. So to really shift and say there is an abundance of opportunity. If Mark wins, we win. If Sammy wins, we win. If Amy wins, we win. And most importantly, the farmer wins, the soil wins, and that's better for the climate. So it's going to require this collaborative approach. It's going to require team. The food industry and the ag industry have been notoriously terrible about that. So, you know, it's a generational shift. I think that's the opportunity. You see that on this panel, this generational shift that's happening, and also with the timeline that we're all staring down. Like there's a real urgency that we get on it pretty quickly. I think the more that the press and the media begin to highlight these opportunities, the more exposure that different organizations get, the faster we as partners and participators and the faster the public can start to learn about these different opportunities. So I think that's a really critical piece. I spend a lot of time educating journalists and really kind of pointing them and showing them different pieces. What's really fun is the farmers are doing the same thing. And then, you know, I'm 100% with Mark on the outcomes. I think the opportunity to really deploy cover crops across the country is enormous. The farmers are hesitant. There's a lot of trepidation around the carbon marketplace. They've been burned before. They've been promised things before. And when you talk to those farmers, you understand why. They will talk about cover cropping. So what incentives could be put in place at the state level? You know, the competitive side of me is like, let's get these states jockeying to see who can, you know, implement and execute and put the most cover crops in the fastest. Water is critical. So as these practices are employed and embraced, impact on water infiltration and water conservation is tremendous. So you look at a state like California, and when those almond orchards are transitioned to regenerative, there's a 500% increase in water infiltration. Policy is not going to be too far behind. So that collaborative partnership with policy, I think, is going to be equally important. Something I am so excited about is seeing younger and younger people getting involved in the policy piece. We have a new USDA undersecretary out of the state of California. She's a 5th generation farmer. She's an organic farmer. And, you know, again, to have these voices at the table will be critical.
I love that inclusive picture that you've painted. Would love to hear next from you, Amy, about what the future looks like.
I will be brief. I would say breakthrough technology innovation that is in consultation with farmers. I think the point was very well made by everyone on this panel, because farmer profitability and farmer adoption is paramount. So that is what I hope to see, particularly from someone who plays more in a venture space that is as climate focused.
Gorgeous. And last but certainly not least, Sammy, what does it look like from your perspective and from the FarmRaise perspective?
Yeah, Excellent closing thoughts, and I love this question, Skylar. At FarmRaise, our vision is vital farming communities. So what we are working towards is a farming system in the United States where farmers have certainty and empowerment in what they're doing on the land. And our North Star outcome is driving better farm profitability across the board and more consistent farm profitability across the board. We think that to get there, we do need to see that shift from 5% of acres in these advanced soil health systems today to over half of cropland acres alone devoted to these systems. We've calculated that to do just that part of the transition, we need to unlock and move $50 billion of capital into farmers' hands over the coming decade, hopefully sooner the better. And we also are looking towards this outcome that our farming community is more diverse. We have younger talent coming not only, as Robyn said, into the professional and the policy side of this, but also working on farms. And we see that farming has grown to include populations that have been underserved by financial resources and technical services in the past. So that's what we're striving for. And I think with the team of everyone on this call today, we will get there. It's so inspiring, and I'm excited for the future.
That is a great note to end on. I too am inspired. Thank you so much, each of you, for making time for this call. And thank you to our attendees. And stay tuned, because next is, I believe, the growers panel, which will fit very nicely in this conversation of Farmer First. So thank you, and see you soon.
Thanks, Skylar. Thanks, everyone.